Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, December the 1st, 2010, and like we do every night, it's time to look at the market, so check it out. Okay, let's start off with overseas market. Looking at the London Financial Times Index at the FTSE, we're looking at what's going on over there in Europe as being a major catalyst to the downside for world markets. That's what's been bringing us down for the past couple of weeks across the board and across the pond. What we had yesterday was a bad print. Let me explain this. If you watched our video from yesterday, you saw me analyze this chart, the FTSE. You saw me show you this long bearish candlestick, and then you saw me show you another longer bearish candlestick formation, completely bearishly engulfing, right? Very, very bearish signal telling you look for major selling to follow. The problem is that candlestick formation changed the following day. It was a bad print. They had a glitch in their charts or whatever at stockcharts.com, and they ended up changing that the next day. So it's going to alter your analysis. Remember, this particular candlestick formation, if you go to our free website at perfectstockalert.com, a bunch of videos there. They're like 5 minutes long. You can go, and there's one called the shooting star, which is a candlestick formation like this, but it's at the top of a pattern. It explains to look for sell-off. And then there's one down here with an inverted hammer. All right, that calls for a bounce, and that's what we got today. So there was no way to see this bounce coming as long as I was looking at a faulty chart. So there was just that's what happened with that. We did talk about Monday, I think it was, whenever the slow stotch, here you are up there, you short up here. When she pulls back down below the 20 line, you look for potential for a bounce there. Every time that happens, you have potential for a bounce, okay? We'll see this again and again and again, but the main thing here is there was no way to see that. With the faulty chart that I was looking at, there was no way to see that. All right, we got that out of the way. You still can see a bounce to the upside here, short term. Watch for that. As the slow stotch pulls back up to the 89, I'll be looking for the shooting star formation and a short opportunity. That's about that. If you're short this market, don't want to sit through a bounce, advance the stop. Okay. Okay, we looked at the BSE a few days ago. Told you she was looking like making a bounce here. It made sense to us. The chart formation was right. You had support at this level. Previous resistance was here. You broke through it here. That makes it support. So the bounce up here, then the pullback was just basic consolidation. Finding support at this level made sense because we had strong support here. So the bounce here would make sense as well. I would look for this to continue to move to the upside. You could see a new high. There's no reason to be a bear here or a short here. This is still tracking like properly. Keep your stop below your entry point, and you're all right. Quick look here at the Hang Seng Index. What's going on there in Hong Kong? They got good news on the manufacturing front, and people expect them to raise their rate to try to combat any bubbles forming over there. You do have a reversal pattern forming here. Notice your slow stocks pulled back down below the 20 lines, looking for a bounce here would make sense. You've had a down day, an up day, an up day, a down day, an up day, a down day, an up day. That's called kicking. It happens at bottoms. You start to see them fighting back and forth. The main thing is they don't have any catalyst to the downside at the moment. As long as the FTSE continues to, as long as Europe's credit crisis doesn't flare up again, these guys could actually see another bounce to the upside. If you're short, like there, advance the stop. We've already done that, but I need to reiterate that for anybody who might not be watching us every single night. So advance the stop on this short. Okay, here we are looking at the Dow Jones Industrial Average. She closed up 249 points for the day. Doesn't really bother me. We've been finding long opportunities like we talked about yesterday. There are quality long opportunities out there. You just have to be selective. You'll notice good volume behind today's move to the upside. We did like that. All right, that's going to be supportive of this move to the upside here, closing above this, where we were finding resistance above the middle Bollinger Band line here. This can have more potential to move to the upside. Another thing to note, currently, you can see the low point of the slow stotch here hits the 20 line. The following low point of the slow stotch does not. It trends up right there, okay? So this is trending up while price activity from the same corresponding time period here and here was trending down. Bull setup. I missed that one. All right, so that's going to be something to pay attention to, and this could drive prices higher. Look for this to continue to press up to here. Look for a shooting star formation at that point, okay? Thus far, I'm looking at this for just for a bounce. You still have lots of problems. We'll show it to you on the NASDAQ right quick. But the main thing here is you can bounce. There are still long opportunities out there in the market. We've got Like I said, we've been issuing them on our free website at perfectstockalert.com. You can check that out. And we've got another one for tonight in the video alert section, so check that out. Okay, before anybody gets too overly bullish on these markets, I want to point this out one more time. This is the NASDAQ going back to the peak of 2007. Look at these gaps. 1, 2, 3, 4, 5, 6, 7, 8. Peaks up here, rolls back over, fills a couple of gaps. All right. Note the entire rally was on low volume. We've talked about this before. Then after filling these two gaps, bounces back up to the upside and starts forming more gaps here, here, okay. Now that you've seen this, let's go look at current time. Okay, here's the NASDAQ looking at current time. You've got this nice size rally, same distance as the 2007 one. Not 8, but 10 low volume gaps right here all the way up, just like you did in 07, all right? Telltale sign of a major peak forming. Then you pull back down, filled a couple of gaps that you had here and here, and now you've bounced back up, creating those gaps again. Identical situation. Don't mistake a bounce in the market as being a bull market, all right? An up day does not a trend make, so to speak, all right? Whenever you see this move here, you cannot change the fact that this is a very telltale sign of a peaking market, all right? So this is an important sign. I still want to point out we do have quality long opportunities out there, but they're few and far between. So you need to, search for the quality ones and be careful situations that are false, because when this thing does crash, it's going to surprise a lot of people. So make sure you have a tight stop on your longs and make sure that you're in quality, okay? Okay, someone asked me to look at the Russell 2000 small cap index. This was made a new high over the previous. Here was the high here. It broke out above that there. Okay, today that's fine. A lot of the opportunities that we're finding out there that are still strong on the long side are actually small caps. So I would expect that this index here, this chart has also been lagging the Nasdaq and the Dow Jones. So the fact that this guy's got more upside or more pop right off the bat there makes sense to me. They've got a lot more room to the upside as opposed to the Nasdaq or something like that. But again, 1, 2, 3, 4, 5, 6, 7. You still have a major market peaking formation going on here. It's important to note that. Okay, whenever this people are out there looking for long opportunities, they do exist, but keep a tight stop. There's really no reason to get yourself caught in this thing. What's going on over there in Europe is not going away. The real pop today across the board in all markets wasn't about what's going on there in China about their manufacturing. It wasn't about the jobless data here in the U.S. It was about the U.S. saying we will help pay for the bailout in Europe. They wouldn't say that if it wasn't necessary. They wouldn't say that if it wasn't an important problem. They've already come out and said, well, if Europe crashes, it doesn't really matter to us. Well, by putting money up there, they're saying that, in fact, it would affect the U.S., and we know that anyway. But the main thing is that problem is still alive. Telling somebody that you will pay a debt or you will help pay a debt doesn't solve the problem. You got to pay the debt, okay? So keep an eye on what's going on over there. If you're bull, we still see opportunities out there on the long side, but they're fewer than we would like, but in any event, they still do exist. And like I said, we've been issuing them all week, so today's move to the upside actually helps us. And there's more opportunities coming out tonight. Check those out to be posted on our website at perfectstockalert.com in about an hour after this video gets posted. All right, cool. Look forward to seeing y'all there. God bless. Take care. A quick look at our disclaimer. The disclaimer, read it and weep. God bless. Take care. Thank you for referring your friends and sharing our videos online. And we appreciate all your support.